Now we can see the objectives and functions of the cost accounting. First objective is ascertainment of cost. The basic objective of cost accounting is to ascertain the cost of a product, job, or services. Expenses relating to a product are collected from diverse sources. In addition to direct expenses relating to a product, joint expenses pertaining to several products are also taken into consideration. Apportionment on some equitable basis while ascertaining the cost of a product. The next objective or function is control of cost. The second objective of cost accounting is to control the cost so that the maximum and better production at minimum cost may be made possible. To achieve this objective, the techniques of budgetary control and standard costing are adopted. The next objective is reduction in cost. Costs are not only to be controlled, but constant efforts are to be made by reducing them. Cost reduction implies real and permanent reduction in the unit cost of goods manufactured or service rendered without impairing their purchase or goods suitability for the use intended. Value analysis, time and motion study, standardization, simplification, etc. are the major techniques of cost reduction. The next objective is determination of selling price. Cost accounting provides cost information on the basis of which selling prices of products or services can be determined. In the event of the depression or recession, cost accounting guides in deciding the extent to which the selling price may be reduced to meet special situations. Matching cost with revenue. The profit of any activity can be ascertained by matching cost with the revenue of that activity. The purpose of this step is to determine profit or loss of any activity of an objective basis. The next objective is providing basis for opportunity policy. Cost accounting is an essential tool for the management to formulate operating policies and to take business decisions like determination of cost, volume, profit relationship, whether to buy or to make an article, etc. The next we can see the principles of cost accounting. Cost accounting has been developed into a system and so is governed by central fundamental principles. These principles serve to achieve the objectives of cost accounting in a systematic manner. The first principle is the double entry principle. Like financial accounting, the cost ledger and other cost control accounts are maintained on the basis of double entry principle. Cost accounting, however, requires a greater use of cost sheet and a cost statement for the purpose of cost ascertainment, cost control, and guidance to the management. The next principle is no conservatism principle. In financial accounting, the closing stock is valued at cost price or market price, whichever is lower. But in cost accounting, the closing stock is always valued at price. There is a value attached to the concept of conservatism in financial accounting, but it is not so in cost accounting. There is a tendency to show reduced profits in financial accounting and to create a secret reserve, but this is not so in cost accounting. The reason is quite clear. If cost accounting adopts the concept of conservatism, the reason is quite clear. If cost accounting adopts the concept of conservatism, the cost would become incomparable. Cost statement are required to be prepared so as to state fact with no bias. However, providing emergency is a normal practice which is allowed in costing. The next principle is absorption rate principle. In cost accounting, the expenses are determined on the basis of predetermined rate. This estimation process is known as absorption of overheads. This is so for the purpose of comparison with actual as a control purpose. Case relationship principle. The costs are collected and analyzed according to their nature and are allocated or apportioned on the basis of cost relationship. For example, canteen expenses are apportionment among the various departments according to the number of employees in each department. Next principle is exclusion principle. Purely financial expenses, abnormal cost, financial incomes, apportionment of profit and capital expenses are completely ignored in cost accounting while determining the cost of product or service. These items are in two way connected with the cost of product or services. They are considered only in financial accounting.